Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, July 8th, at the market's close. Well, Wall Street ended the day flat today as Treasury yields jumped following a stronger than expected U.S. jobs report, which suggested the Federal Reserve may push further interest rate hikes to cool the economy and slow inflation. Oil prices rose over 2% today, but we're still down on the week following a steep sell-off earlier in the week on concerns about energy demand and a potential economic slowdown. And on that note, let's go on to three charts that could give us some insight into the week to come. First of all, we always look at a daily chart of the S&P 500 SPDR, symbol SPY. Of course, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. And as traders, we are tops down. We always want to know what the broader market, the bigger market is doing, because we know that will potentially influence the stocks we are trading. Now, the SPY closed today at $388 right over here and 67 cents. That's 19% below the SPY's last all-time closing high up here on January 3rd at $477.71, or $47.77 on the S&P 500 itself. So now we are down 19% below that all-time high. So the SPY has just kind of squinched and climbed out of bear territory by 1%. When an asset falls 20% below its all-time high, then it's considered to be in bear territory. So we know that the SPY has basically, not the whole time, but basically been moving south since the first of the year. Now, if we look at this chart here, we can see May's high, the last major high, came in here at for about $417, and that's below the 200-day moving average, the black line, below the green line, the 50-day moving average, and in that case, right then, was above the red line, the 20-day moving average. So we can almost see here how the green line, the 50-day moving average, is almost providing us with a downtrend line pretty close to the tops of these moves here. Of course, I drew another line. I wasn't satisfied near my crayons, so I drew a trend line over the highs here to show you what potential resistance could be offered by this trend line and the 50-day moving average next, if that happens. So after that May high, the SPY did a dumpster dive down here to these June lows at 362, and we've been watching that 362 low ever since, because that's very important. It then rallied up here to 393. Then it dipped down to 372.50. So we have this little tiny low here. And as again today, it closed at 388.67. So is this the low? Well, we thought that was the low, and maybe. And a lot of people said, well, that was the low. That February 24th was that big gap down that everybody did. I mean, we can pick out what we thought were the lows all the way along here. So am I going to get fooled again? Actually, I didn't get fooled. I've been in this market for so many years and seen so many bear markets that it's not that I shrug off bear markets, but I know they are a necessary part. The market can't keep going up unless at some point it goes down. And quite frankly, we can dig up whatever reasons we want, and black swans and perfect storms and all those things. But the absolute truth is that is kind of the umbrella of it all, is that the markets, the financial markets of industrialized nations, move in cycles. Okay, that's it. They move in cycles. They move up and a little bit sideways and down. They do not move straight up forever. And please, Lord, they don't move straight down forever. So markets move in cycles, and we're always going to have bear markets. And hopefully we're always going to have even bigger bull markets. That's the way it's always been, okay? So what we're going to do here, if the SPY drops in the coming week, of course, we're going to watch this low right here, this little low at 372 or so. That could act as support. We want to definitely keep our eyes and jot down the number 362. It will, of course, be negative if the SPY drops back down to this level, because that means it could potentially go below it and take us yet another leg lower. But it's done pretty well. It's over the 20-day moving average. Now, if it can move up over the 50-day moving average at 396, that would be great. And if it can keep doing that, we may not call it the bottom, but we certainly would have a little more positivity coming into the market. Please know that bear markets like to scare the heck out of traders and investors, especially novices. So what I like to say is patience is key in these markets. Please don't assume we're hitting a bottom until we actually see the definition of an uptrend come in, which is, of course, higher lows and higher highs. Our next chart today is a chart of the Invesco QQQ. This ETF represents the Nasdaq 100, and the top 4 components in the QQQ today are Apple, Amazon, Microsoft, and Tesla. Those are the top 4 holdings by market capitalization. Now today the QQQ closed at $295.35. That is about 27% below its all-time closing high, which was back here in November at 403. So the Qs are still in a bear market, but we do have kind of a little low coming in here. Now our recent high here was up at about 315 in June, right here in June. This consolidation right here was at about 315. Then the Qs fell down to this June low at 269, rallied up to 294, excuse me, 294, fell to 276. So we also have a little intermediate low here. And we want to keep an eye on that level of June 276. Definitely, we want to keep a note at our elbow that the low here for the Qs is 269. I mean, could we see a rally here? It kind of depends on what the Fed does with interest rates. And again, of course, if they raise them again, we'll have to see what the market does. Sometimes the market doesn't like that at all. So keep an eye here on 269, see if the Qs can get over the 50-day. If they can, that's good. And then it has to get over that 315 line. So we'll see it noodle around in here for a while, I'm sure. Please remember, in these kind of markets where this is going on, I've said it before, I'll say it again. It's not how much you earn, it's how much you don't lose. Okay, let's go on to our final chart for the day. Keep in mind now, I'm going through, 100 or more exchange-traded funds that represent sectors and industry groups, and I'm looking for good price patterns. And of course, in my head, I have, is there a reason that this ETF should go higher? So that's kind of what I'm thinking here. We've traded this before. It's the Invesco Solar ETF, the TAN. This is a daily chart. It has 54 holdings. Top holdings are Enphase, Solar Edge, First Solar, and Sunrun. Now you can't see on this screen, but the TAN, the TAN, hit an all-time high in May, shortly after its inception of 2008 at $307.90. Now it fell dramatically from that 307 high. It fell dramatically from there, actually down, hit a low in 2012 at $13, rallied up to about 126 in January of 2021. Now, if we look at this chart right here, we can see we went back here into the last quarter of 2021. So we can see that, and we can see the November highs at about 101. So these highs, November, December, it was trading at about 101. Then it fell like a stone. Talk about a dumpster dive, but at least an orderly one. Finally ended up at this famous February 24th low, when everything made a low on that day. And this came down, the tan came down to open at about $56. Now it rallied from there in April up over its 20-day, its 50-day, up to the 200-day moving average to about $80.50, fell back down, retested the February low, then rallied to about $80.50 back here, up here in the first part of June, or $79, I should say, right here. That'll work. So here we see the 200-day moving average drawing a trend line for us again, or at least a resistance line for us. And we can see that the tan moved up to it in April, couldn't get over it, fell back down, retested these lows, tried to get over it again in June, couldn't stay over it. And you've heard me say many times, if something can close over the 50-day or the 200-day or resistance, whatever it is, if it can close 3 times, then it has a good chance of potentially going higher. What happened here was it couldn't do it. It couldn't do it. So the tan couldn't close 3 days in a row over the 200-day moving average. So it moved back down here in June and then started back up over the 50 and came up to that 200-day moving average. Said, I can't do it again, the poor thing, back down to the 50-day, and then right up now to where it closed today, finally got back above the 200-day moving average at $76.68. So I like this pattern here. It's not a double bottom until it closes above it definitively. But double bottoms are good bottom reversal patterns, as you know, if they play out correctly. We haven't gotten this all played out yet. It may not. I'm very, very neutral right now, but I would like to participate a little bit if something happens here. So if in the coming week the TAN, stays above $72, now 72 is right down here, right around, just above the 20-day moving average. I know I'm being kind of, a lot of people say, why wouldn't you put it below the 50-day? And you can. I'm just not in the mood to lose a heck of a lot of money if the market goes nuts again. So I'm saying if the TAN stays above $72, which is actually between the 250-day moving average, if it stays above 72, and if the overall market is relatively calm and not falling like a stone, I will buy a small position of the TAN, and my hard stop will be placed with my broker at $71, okay? That's just a little above the 50-day, and you can put it wherever you want. If and when the TAN can rise above and close above 79, up here, if you can rise above and close above 79, I will add to my position, and by then I will be using a trailing stop. So you might want to keep an eye on the TAN in the coming week. And now, while the market is still a bit dicey, know that this is the perfect time to invest in yourself. Take a few minutes to check out my online training programs and see how you can become a better trader. These programs include our flagship 7 Steps to Successful Trading, how to swing trade successfully, which is great in a market like this, how to trade the trend to profits, plus for novices, how to read charts, 3 winning setups, and right now a great program to learn how to bottom fish like a pro. These programs are timeless and they can help you increase your gains quickly and easily. To see all of my online training programs, simply go to the link on this screen, or easier still, click on the orange button below. Until next week, be careful out there. Keep green on your screen. I'm Toni Turner, and this is The Market Now.